Hi Toby, how are you?
Hi, very well, James.
Well, look, Spotcap was founded less than 2 years ago, so it's been quite a fast ride. You've opened in Spain and the Netherlands, and then Australia as your third market. Look, I'd just like to sort of take you back prior to starting the business. You spent 4 years at Goldman Sachs and a bit of time in an emerging market hedge fund as well. What was the opportunity that you saw just before Spotcap was founded that you were trying to target?
I mean, it was really my experience prior to Spotcap that led me to understand the opportunity. I was analyzing much larger companies and companies of 100 million EBITDA in size who were struggling to get access to finance, and it was only obvious how much more difficult that would be for the smaller companies and those that, often that are completely not banked, often those that are just simply too small, too young, too risky to get any real access to finance on an unsecured basis.
So Spain was your first market, and then the Netherlands. It seems as though Australia is, well, it's obviously geographically a long way from both of those two countries. I mean, how is it that Australia gets added as the third market to that network so quickly?
Yeah, it's probably not the obvious one, having started in continental Europe. For us, it was really driven by the opportunity. Australia is completely different to the two markets that we see in continental Europe, in Spain and the Netherlands, but ultimately the opportunity size is there, with roughly 2 million SMEs that are to a very large extent underbanked when it comes to getting access to finance on an unsecured basis. And it was really those two things, coupled with availability of data, coupled with a somewhat benign yet not clearly defined regulatory environment, that made us decide to go to Australia.
I mean, in Spain, obviously, Toby, I think you had a situation where the banks were probably quite reluctant to lend into the small business market, in the aftermath of the financial crisis. In Australia, decent big bank support for small businesses, but when you talk to small businesses, one of the big gripes they have is the need to pledge security, often property security, in the form sort of mortgages of the directors or small business owners' personal houses, before their approved SME loans. So to what extent is that sort of secured lending out of the big banks the opportunity for you, as opposed to all those other things that you're talking about, such as internet penetration and digital sophistication and the like?
I think it's certainly a key driver of the opportunity. It's not the only one, as you mentioned, but it is quite key. And not everyone, a small business owner, would like to pledge hard assets, and mostly in the form of their personal houses, against a business loan. And why not? And that same business owner is happy to possibly pay a little bit more for an unsecured line of credit or an unsecured loan to get that finance. And of course, it's the speed and it's the flexibility which online lenders can offer as opposed to banks. It's in many ways overcoming an inherent inertia.
So you've been in the Australian market for sort of just under a year now. I'm not sure if you want to sort of share with us any numbers with respect to sort of lending books or customers. I mean, I'll leave that to you. But can you give us a little feel for how the business is tracking in its first 9 months?
Yeah, I mean, it's going very well. It's going better than we expected. Obviously, we had a very different experience in Spain as our first market, a much more difficult market when it comes to tech savviness of small business owners, when it comes to internet penetration, when it comes to online bank account availability. So Australia, in many ways, had a head start for us, and we've done better than we had expected. At the same time, it's probably too early to give you guys some hard numbers as to how we've done in the Australian business so far. We're growing very fast month on month, and we've been lending since May of last year. At the same time, we're still very small relative to the opportunity, which is gigantic, and I think that holds true not just for Spotcap, but to the wider industry, which is very much at the cusp, very much at the infancy of exploiting the enormous opportunity that we and our friendly competition see in Australia.
Okay, if we don't want to talk about hard numbers, that's fine. But could you give us a little bit of a feel for how the Australian SME lenders look compared to the ones you're seeing out of the Netherlands and Spain? Like, what's the profile of the customers? How much are they looking to borrow? And have you had to make sort of adjustments to the platform to sort of localize it for the Australian market?
Yeah. So the sort of the profile of the, I would say, average small business in Australia is certainly different than in continental Europe. They're probably at the margin, they're more tech savvy, which definitely plays in our favor. They are, much more used to using online accounting software. They often have online bank accounts. These are all key attributes which are important for us in gathering the data that we need to score. Having said that, if you look at the broader profile, the businesses that we've seen in the Australian market that apply on our Spotcap platform are much bigger in size. That was definitely surprising to us. So we lend up to $250,000 in the Australian market, and our sort of average size credit line or loan is roughly probably $40,000. That is at least twice as high as our average credit line that we grant in both Spain and the Netherlands. So that's quite interesting.
And look, what's your thinking? We heard a little bit this morning from the previous speakers about customer acquisition and sort of how you reach clients as a key challenge to overcome. I mean, what's your thinking about the distribution agreements that you might need to think about, partnerships that you might need to think about in terms of sort of the very, very low levels of SMEs probably even understand that fintech exists, let alone what the specific opportunities are from a growing number of players in the space. So how do you think about customer acquisition?
I mean, it's one of the biggest challenges for us because ultimately, the segment that we target or that we want to do business with, small business owners, it's still relatively small compared to the consumer side where you can just target them much more easily. We need to be much more thoughtful and mindful about how we reach the client target market, and that in itself is the biggest challenge. Just spending a lot of money on online marketing might not be the best strategy. You've got to be a little bit smarter about targeting those, and partnership. James, you mentioned it, is obviously a key word for us. And collaboration with big institutions, including the banks. We've got we're working with the second largest bank in the Netherlands. We're speaking to a lot of interested parties here in Australia about forming partnerships that will ultimately, help the small business owner understand the space and make them aware of Spotcap. There's an interesting statistic: 39% of Australian small business owners can't name a single fintech company. And by fintech, that doesn't really mean alternative lending. That includes payment providers and arguably the better known ones, including PayPal, Square, and those guys. So you would imagine if that same question was asked, how many of those small business owners can actually name an alternative lending provider? You would probably be looking at less than 10%. So we've got a long way to go.
Look, and you mentioned the partnership that you have in the Netherlands. I gather that's with ABN AMRO. And we heard earlier this morning from Noah that Ondex sort of done a deal with Commonwealth Bank of Australia. I mean, so you are looking to sort of do a collaboration deal. Is that how you would how we should describe your thinking about how you'd potentially link up with one of the big banks, one of the regional banks in Australia? Is it a matter of collaborating and working with them and potentially funding the sorts of small business customers that wouldn't meet their lending criteria for whatever reason?
Yeah, that's certainly one way. I mean, the level of partnership and the level of collaboration can range all the way from simple referral partnerships, where, as you mentioned, James, the business simply refers the type of business that would not fit a bank's eligibility criteria when it comes to minimum years in business, size, riskiness in general. And there are certainly a lot of those out there, especially on an unsecured basis. But it can go a lot further, all the way to funding agreements where, or even equity interests. So the level of partnership or the degree of collaboration can vary and can intensify and probably will intensify over time.
I'd just like to shift gear a little bit, Toby, and talk about funding. I mean, we recently heard some reports down here of the sort of recent $50 million deal that Spotcap has done, and part of that was to expand into the Australian market. I mean, I think you've raised around $75 million in the first 18 months of operation. So that sounds like the capital is there. I mean, I understand that the new funding is sort of contributed by a private equity firm from Russia. Can you tell us a little bit about Finstar and a little bit about how that deal worked? That's both a bit of equity into the business itself for growth capital, but also a funding facility for the actual loans. Is that right?
Yeah, exactly. So we raised our Series A in the fourth quarter of 2014, and more recently announced a funding deal with Finstar, a Russian private equity group that has a lot of interest in fintech businesses, but predominantly in consumer lending. So they own the biggest consumer lender in Europe called For Finance. And they invested in Spotcap to diversify away from consumer into SME lending. And they bring a lot of we view them as a key strategic partner because they bring a lot of expertise into the business. And especially as we think about growing the 3 markets and potentially entering new markets, we view them as a core partner. And they, as you mentioned, James, the majority of the funding was equity, but there was also an element of debt funding involved to fund the loan book.
Look, and as the loan books scale up, if and when they do, what's the sort of arrangements that allow you to scale the lending into that demand?
Funding sources for the loan book, and we are sort of an on-balance sheet lender where we don't have the retail investor on our platform, even though I understand that most so-called peer-to-peer platforms have a majority of their funding come from institutional investors. That's just the nature of the business. That is driven by the size of the funding that is required to really grow a loan book. Initially, you target, as you set up an online lending platform, you've got to target a much smaller market because no one in their right mind will be prepared to offer you a 100 million credit line at sub 8% interest rates. That would just be foolish and would, to an earlier point made on the previous discussion, that would just not be pricing risk appropriately. But as we grow and as platforms grow, the funding sources become different. And I guess they go all the way to securitization deals, which I understand there has been one already in Australia. There have been a couple more in the US, but that will ultimately be the way forward and will also be giving a broader variety of investors the chance to participate in this growing and, in my view, very, very exciting sector.
On the securitization deal, that's right. Like just off the top of my head, I think Prosper, the Australian company, did about a $50 million securitization in which the Carlyle Group was a quite interesting investor in that. Interesting to see sort of global PE firm with alternative investment funds as well, sort of coming into that asset class. Do you think that $50 million size is sort of around about where the market is at? And what do you think about the demand from US institutional investors, including private equity firms, for 50 to 100 million alternative loan securitization deal? What's the pool of capital like for that sort of deal, do you think, at the moment?
The pool of capital is gigantic, and I think a lot of investors are sitting on the sidelines waiting for the sector to grow. And some of the bigger players, for them, the 50 million Australian dollar type size is sort of, I would argue, the bare minimum to get excited about. More often you would see in the US and increasing in the UK, I would argue that the minimum size for a securitization type deal, such as the one in Prosper, is $100 million and beyond. So big banks, big private equity and hedge fund investors, they will only start getting interested when we talk about 100 million and beyond.
Look, and Toby, what's your thinking on sort of the being private company versus the public markets? Like a lot of chaos on the listed markets over in the US in the first part of the year, which we've heard about, and On Deck and also Lending Club and other the big sort of fintech floats are trading down a little bit this year, and that's part of a whole change of mindset with respect to the whole unicorn dynamic they were all talking about last year, and everything seems to have just de-risked a little bit. As global markets have been extremely volatile. What do you make of all of that when you think of whether or not you take Spotcap onto public markets in the future?
It's a little too early to tell. So we're nowhere near as big as Lending Club and On Deck today, yet we have ambitions to be there one day. For the time being, we're quite happy to be a privately owned company with a variety of investors, all the way from an incubator, which seed funded us, to one of the leading German VC investors, all the way to Finster, which we just recently announced. At the same time, quite open to thinking about opportunities to go public in the future. The capital requirements, as you grow, clearly become bigger, and the public market is one way to raise a lot of money, but it certainly is not the only way. There are increasingly very large and interested investors on the private side that could really support a tremendous growth.
I'd like to also just ask you a little bit about the competition dynamics within the market in Australia. You've probably got around about the same number of small business borrowers as the UK. The UK's probably got a few more, but 2 to 3 million, say. In Australia already, we've seen quite a lot of companies arrive in the market. Many of them are here today, and also a number of local players as well. 6, 8 sort of players in the market already, and that's a lot more than what you're looking at in Spain and in the Netherlands, and probably as much as the UK, or perhaps even more as the UK, for a market that's sort of a lot further away and potentially overall a lot smaller. So what do you think about those dynamics? What are you, how are you, planning, I suppose, to sort of compete against the other players in the sector at the same time as you're actually trying to grow the whole sector, so everyone's got a larger piece of pie vis-a-vis the big banks?
I think competition is very conducive in building awareness, which is ultimately what the sector needs to get to at this stage of its infancy life, I would argue. In Spain, we've got the problem, when we launched in the fourth quarter of 2014, we were the only alternative lending company in Spain. You might argue that's a phenomenal opportunity, but I would argue I would have wished for more competition to be there, precisely because it was entirely upon us to educate small business owners that there is an alternative lending product available, such as what Spotcap offers. That is very, very difficult. It takes time, and if competition sort of somewhat joins forces and builds an ecosystem, it can be a lot faster. And Noah mentioned earlier on this morning that as he would expect Australia to grow much faster than when non-NEC first came to market in the US, and that is partly, I would argue, driven by the fact that we've got a unique chance here to form an ecosystem that not only is composed of small business lenders, but it's also composed of investors, it's composed of the government and regulators, all working together to form this ecosystem to build awareness. So I think competition in Australia is healthy and is very much a good thing. At the same time, I mentioned that statistic about the awareness of the sector today, which is very, very low still. So, I don't think competition is negative today, and I would also probably argue that 5-10 years down the line, there might be consolidation, but certainly not in the next few years, where the opportunity is so gigantic relative to the market share that the players have today.
And just a question on the sort of interest rate environment, if you don't mind. Like the whole arrival of the peer-to-peer lending sector and this alternative lending sector has probably occurred, in a very low interest rate environment post GFC. I mean, Noah was saying on deck obviously started just before that, but we've sort of seen, the arrival of the sector into that environment. Who knows when rates will start to rise and normalise, but even if that's sort of 4 or 5 years down the track, how do you think the business, the online lending sector, and perhaps the P2P sector more broadly will respond to an environment with higher interest rates, both from the borrower and the investor perspective?
I mean, I think it will be interesting, and a lot of players, I would argue, don't think about what will happen in an increasing interest rate environment, and certainly that will have an impact because the cost of funding will go up. Either you pass that on to the borrowers, or it will impact your margins. So it will certainly have an impact, and larger players that can raise money from a diversified pool of capital will probably benefit. So it is, in many ways, it is an opportune time for the smaller, younger companies in the alternative lending space to come to market and grow, because in in a much higher interest rate environment, that will be much more difficult to raise funding at attractive rates.
And look, just Toby, in the 2 or 3 minutes that we've got left, I'd just like to ask you about the sort of policy settings in the UK and also in Australia. And we saw as Fintech Week in London last week, George Osborne, the Chancellor of the Exchequer there, is up again talking about the policy environment that he's created to let Fintech thrive. We heard earlier today that we're going to soon see mandatory referral laws in the UK for customers who aren't banked by the big banks will have to be referred into companies like yours. Sounds like a encouraging policy from your perspective. I mean, how good is the UK settings at the moment? What sort of things do you think Australia? We've got a Prime Minister who's been talking about the ideas boom and creating an agile economy and has put technology at the centre of that. What are the sort of policies that you're seeing in the UK that could really help the market kick along down here?
Yeah, I mean, the UK is certainly at the forefront of having created an environment or a framework for the alternative lending players to operate in, which ultimately protects the consumer. And that's why regulation is in place to protect the consumer. That makes a lot of sense for the healthy competitors in this space, because ultimately what regulation does, it creates trust, it creates credibility, which are two attributes that we need to sell our product to small business owners. We're not selling T-shirts where you don't really need a lot of credibility and trust. We're in the business of selling money. So to the extent that a regulatory environment or framework can be formed that will benefit everyone.
Would you like to be regulated down here? Like, you're not regulated by ASIC or APRA in Australia?
Absolutely. So what we did we're not operating in the UK today, but we have proactively and voluntarily received our credit license from the UK Financial Conduct Authority, precisely as a sign to show everyone, including our investors as well as our clients, that we take regulation seriously and we like to be regulated. And what we've done is we've implemented FCA-type regulatory requirements globally in our 3 markets, Spain, the Netherlands, and Australia, to be well ahead of the curve. And I think regulation will come, and it is good that it will come.
Hello? James, I've got a question for you, actually, a question for each of you. James, just looking at this from your kind of experienced journalistic angle, what do you think is going to be Toby's biggest problem?
Look, I mean, he's probably touched on it already, I think. I mean, I don't want to try to predict sort of what happens with interest rates. I mean, we'll see with what that, and he's answered that. I mean, I think it's awareness. I mean, this sector's getting a lot of coverage in the financial media here. It has for the last year, 18 months, even 2 years. Certainly the business community, the institutional investment community are very aware, I think, of what's going on, and that'll continue. I think it'll be interesting to see whether or not that translates through to the 2 million small business customers.
Well, that was my question to you, Toby, then. I hear a lot of talk about securitisation and capital inflows, but I don't hear as much talk about origination. Because the problem is, Noah mentioned it earlier, and I write about it in the UK a lot. SMEs just time poor. They just don't have the time, disposition, or interest. And in the UK, there's this great talk about disintermediating everything. And the single biggest source of all SME loans is finance brokers. We're supposed to be disintermediating, and yet they're having more power. Where are you going to get, if you get 100, 200, 300 million? Where are you going to get these SME businesses from?
I think the answer is variety and diversity. You can't rely on any single source of in your client acquisition strategy. So it is a combination of the clients that you mentioned, but it is finding smart acquisition strategies and implementing them both online and offline to reach awareness and to reach your small business directors that will think in the back of their minds that if I do need financing, there's a Spotcap where I can get it from.
But if you end up being 70% finance broker based, isn't that going to be the reality?
I don't think we will be 70% finance broker based.
Okay. We'll come back in the next couple of years and find out. Okay, put your hands together for these guys. Thank you very much.